Hey guys, hello everybody. My name is Jonathan Rose and welcome to Masters in Trading Live. A little wiggly of a stock market opening, a little back and forth this morning. We got 4 topics today. Number 1, tomorrow, Friday, non-farm payroll, unemployment, expect volatility. The market will move tomorrow. Do we need some insurance? Do you find when the market ticks down, your portfolio is getting killed? You might need some insurance. Let's talk about it. Got a great member question. We're going to call this topic Prove It. And then finally, the trade of the day is flying right now. So let me get through these and we'll get to the trade of the day. Let's go to the charts. See you on the inside. All right, friends, here we go. Throughout this entire week, today is Thursday, we've been talking about a concept called the line in the sand. The line in the sand is just a way to simplify above bullish, below bearish. That's it. It's an overlapping number that keeps coming throughout the week. Tested a little bit here, gapped under, line in the sand held up. Tomorrow, non-farm payroll. This is the level to watch. SPY, 518.40, something like that. Treat it as a band. The Qs we've been talking about all week, but the Qs have been over that key line in the sand. So all week, strong. Anything above that key line in the sand, remember, bullish, but what are we also? Volatility. Volatility over that line, where bearish volatility, we expect less uncertainty as we rally. So bearish vol, and again, 433. Now, tomorrow, unemployment, 7:30 in the morning. Anything above 433, bullish, bearish volatility. Anything below, watch yourself. Be careful. Now, I mentioned earlier, a lot of people get caught, especially in these bullish markets where everything just seems to go up, not to have any protection. So let's talk about insurance, because the market's so cool that we can buy insurance for as long as we want. Tomorrow's NFP, non-farm payroll. Let's buy insurance for 4 days, or you can have the option for buying insurance. Now, this isn't the trade of the day. Who is this for? This is for those that are sitting there and they have 3 positions and they're long Microsoft, they're long NVIDIA, they're long Amazon, they're long everything, but they're not short at all. For those people, tomorrow, the line in the sand, right? Actually, the line in the sand is going to be 433 way away. So for 4 days, consider buying the 442s for $112 per contract. That gets you short 100 shares for every option that you buy. That will give you insurance in case the market pulls back after non-farm. Remember, I'm talking to this person, the person who's just long. Maybe you want insurance for a little bit more time. What about a 15-day insurance policy? Let's go 15 days. Again, 441. Let me check my other screen right now because I want to get you more levels than that, because we need to look at more strikes. So let me I'm on my other screen right now. Give me a second, guys. And really, we want to look right by that line in the sand, right? So that line in the sand is going to be 433. 433s. 433s right now are trading $1.76 bid at $1.77. So for my guys that are long everything, if you want to buy one of these, it's $177, and that'll get you short from 433, short 100 shares, and you'll have that insurance for 15 days. Really a good do if your portfolio gets smoked on that downtick? I got a great question. Hey, Wally, thanks a lot for sending in a question. Wally shared that his goals. Wally wants to learn, develop his skills, and manage risk to potentially boost his retirement. I'm a big fan of paper trading. Whenever you go into a new market, paper trade. For those who have never traded options before, paper trade. If you're out there and you're like, Jonathan, I don't like the paper trade, I need action. What I say to you is that's not real. That's something that you're creating in your own head. You don't need action. You just need to respectfully, grow up a little bit. It's okay. Let's paper trade. Let's make sure that we can make money before risking real money. How I like the paper trade, honestly, I like to chart my P&L. I like to have little goals. And so the first day you trade, maybe you make $100. You make 200. You make 100. You want to see your account steadily grow. That's the goal. What we don't want to see is 100, 200, 100, boom, lose $1,000 and then chip away here. Okay? A great thing to do is, let's say, week one. Okay, week one. Have a goal. Small goal. $500. Week two. Maybe you want to try to make 500 again. Maybe you want to try to make 1,000. Whatever it is. Here's the rule, though, guys. No passing your week until you accomplish your goal. When I say prove it, I'm asking you to prove it to yourself that you can make money. What we need to do, and I've said this before, is we need to build your memory bank. You can learn as much as you can be on here all the time learning, but when you have action, when you have money at risk, it's a different way of thinking. So a great way to paper trade something new is give yourself a goal. I want to make $300 this week, $500 this week, and you don't move on until you accomplish that goal. Once you accomplish that goal, then you graduate to risking real money. This is something that's worked very well for the guys that I've worked with in the past. Trade of the day. This is a frustrating trade of the day because I got to tell you, first time this has happened. Let's look at all the orders in USFD in 2024. Okay? Not every order, but yeah, we counted every order, and the biggest orders are listed here. The biggest order of 2024 was a $2.1 million block. That trade was done yesterday. Yesterday, guys. It was done yesterday at 2:12 my time. It was a monstrous trade, 15,000. Now, USFD is about a $15 billion company. $2.1 million trade for a $15 billion company is a big deal. Now, this trade was done right here, okay? After this trade, the market got smoked, absolutely killed, because the market makers filled the order, and the market makers were all long stock. They have to sell stock, forcing the stock to go down, okay? That might be a little bit confusing, but the big thing we want to see, whenever we see a big order like this, what does the market do right after? That's the way the market's going. This was yesterday. This was right before I started. So annihilated, absolutely annihilated, traded down to 50.80. So what's going to end up happening is when I originally put this together, I got some levels for you, but this darn thing won't stop moving. Word is out. So here's what we're going to do. 52.82 this morning. Right now, the stock is trading 51.60. The order that we're referencing is this gargantuan order. 15,000 options. Once in the money, that's equivalent to 1.5 million shares of stock. This morning, we only traded 100,000 shares. This is a tremendous order. Now, originally, I was going to say, guys, just get in here and buy. But apparently, we can't do that anymore. Right now, the market is 190 at 205. The trade that I'm going to suggest is let's be 175 bid. And let's place a limit order. Let's bid 175 on this 50 strike. Our risk is going to be $175 per contract. Now, right now, the market's $1.90 at 205. So it'll be a resting order. So we do need this to come back a little bit. But what I don't want to do is come in this morning at $1.50 and then say, guys, it's at 210. Let's go buy it now. Let's have a little patience and let's have some discipline. I was so excited when I found this USFD trade. And then I confirmed that it was bearish without a doubt. They were buying puts. You could see it in the market. That's why we call this advanced notice. Because when we see an order that's 1.5 million shares of the underlying stock, or they did it 15,000 puts on a $15 billion company, that's something that traders absolutely want to know about. I'm a big believer, and we want to think of the market from a different perspective. I like to say the creative trader wins. Trade smart, and I'll see you tomorrow live, 11 o'clock Eastern time. Thanks for watching.